My name is Gary Kawada. I am a CPA and tax attorney practicing in Los Angeles, California. And welcome. This is IRS Masterclass Podcast number 4. Many of my clients want to know what information the IRS has on them personally and their business. In this Masterclass podcast, I will reveal and share with you the sources of information that are available to IRS personnel and how they are trained to use it. Now, contrary to popular belief, the IRS does not maintain a file of information on each of us. That's the good news. Bad news is the agent can obtain financial information from various internal and external sources. This information can be arranged into 4 main categories. Information held in IRS internal data banks, which I think is the most interesting. Information agents can obtain from state and local agencies, information from private sources, and the information the IRS agent can secure during the interview process, either interviews conducted directly with the taxpayer or with third parties, such as the taxpayer's account. We will discuss the topic of interviews in another podcast. So what is the information that is contained in IRS databanks? The IRS secures information from many different sources, including its own underreported program called URP, Currency and Banking Retrieval System, CBRS, and private company data banks. The IRS uses the information it secures from third-party financial companies to identify income which is omitted from a tax return. For example, if a taxpayer fails to report interest income that the IRP transcript will identify, then that will be indicated on the transcript. Most of the IRS correspondence audits, which are letters sent directly to the taxpayer from the service center, are based on the information obtained from the URP transcripts. The URP information flags taxpayers who either omitted income or failed to file tax returns. So let's take a look at the information contained in the URP database. I'm sure you're familiar with the first two. Form W-2 provides income and withholding information on wages or salaries. Form 1099s filed by banks and financial companies to report interest and dividends paid to investors. However, there are a number of other Form 1099s that also report other types of income and financial information to the IRS, such as sales of stock or mutual funds that are reported on Form 1099-B, proceeds from the sale of real estate, which is reported on Form 1099-S, and non-employee compensation reported on Form 1099-NEC. A very interesting 1099 is the Form 1099-K. These are credit card charges reported to the IRS by third-party payment processors like Visa, MasterCard, and American Express. The IRS often compares credit card sales to total reported sales on the tax return to identify omitted cash sales. Form 1098 reveals mortgage interest expense paid and the loan balance. Does the amount paid to the mortgage holder look reasonable in relationship to the income reported on the return? That's just one of the questions that comes up based on the information provided on this form. The second category of information comes from the Currency Banking and Retrieval System, CBRS. It's an internal data bank which contains information required to be reported to the Treasury Department by the Bank Secrecy Act. Number 1, currency transaction reports or CTRs on Form 104 that are filed by banks and reported to the Treasury Department when a taxpayer deposits or withdraws cash more than $10,000. Currency transaction reports by casinos, CTRCs, on Form 103, issued by casinos when a taxpayer deposits or withdraws cash more than $10,000. Currency and monetary instrument reports are reported on Form 105, reported by travelers entering the United States with more than $10,000 in cash or monetary instruments. Suspicious activity reports, SARs, filed on Form 111, issued by banks to identify taxpayers who make frequent deposits of cash of less than $10,001 to prevent the bank from issuing CTRs on a particular depositor. They are also issued by banks to identify taxpayers who make a series of less cash withdrawals on their deposit slips and among other suspicious banking practices. Form 8300 filed by businesses that receive cash from a taxpayer in excess of $10,000 or cash in a series of transactions for less than $10,000 that in total exceed $10,000 or more. For example, if the taxpayer deposits more than $10,000 cash when purchasing a car, the dealership is required to report the transaction to the IRS using Form 8300. There are other internal IRS data banks. The Foreign Bank Account Tax Compliance Act, or FATCA, is an agreement entered into almost by every country with few exceptions to exchange information on individuals who open and maintain accounts in foreign countries. This data bank is used by agents to identify foreign bank accounts that were not disclosed on foreign bank account reports as required. This could possibly lead to identifying unreported income diverted to foreign bank accounts. Category 2. Other government agencies. During an audit, the IRS may summons information from other state government agencies such as state sales tax, state income tax, employment tax, and Department of Motor Vehicles. For example, the agent can request the vehicle information, make, model, and year for all cars registered to a taxpayer from the DMV to obtain background lifestyle information on a taxpayer. The Secretary of State can provide corporate ownership information, such as who the officers and the shareholders of a corporation are, and if there are any affiliated corporations tied to the company being audited. The information can be used to identify a taxpayer who has a pattern of opening and closing companies, leaving unpaid tax liabilities behind. Civil and criminal court records, especially lawsuits and complaints filed in state and federal courts, may reveal information about the taxpayer, such as previously undisclosed business transactions, alleged fraud committed against other companies or agencies. Local city and municipality data banks, like the County Recorder's Office, can provide information on real estate holdings held by the taxpayer. Again, this can provide information regarding a taxpayer's lifestyle or even unreported rental income. Category 3. Private sources of information. Internet searches provide a wide range of historical and relevant information on a business. Information such as affiliated companies, names of major customers and suppliers, sales volume, expansion plans, other locations that a company may be operating its business in, and more. In fact, a recent audit was initiated based on the taxpayer inflating sales volume on their website, which did not reconcile with the returns filed. Credit reports may reveal credit checks by banks and other financial institutions, which can lead the IRS to identifying undisclosed bank accounts that unreported income may be diverted to. The agent can obtain a custom comprehensive report from a third-party supplier containing 20 categories of information, such as the water and aircraft owned by the taxpayer, liens and judgments filed against the taxpayer, UCC filings, and even criminal record information. So in summary, the IRS can obtain information from a variety of internal and external databases. All of these sources of information help the IRS piece together a personal and financial profile of the taxpayer. Not all IRS agents and auditors will utilize all of these sources of information during an audit, especially during an office audit that allows for less time for examination and for investigation and minimal third-party contact. However, it's good for you to know what information is available to the IRS should an agent decide to conduct a thorough and personal background investigation as part of their audit. Thank you very much for listening to this podcast. I really appreciate it, and we'll see you on the next one.